It's the 27th anniversary of the Exxon Valdez crash. All that and more on this Energy and Materials edition of Industry Focus. Greetings, fools. Sean O'Reilly here at Fool Headquarters in Alexandria, Virginia. It is Thursday, March 24th, 2016, and joining me to talk all things energy and materials is Tyler Crow and Taylor Markman. How's everybody doing?
Doing pretty good, man.
We missed you last couple of weeks, Mr. Crow.
Well, last week we did a pre-recorded interview
true.
anyway,
Which was awesome, by the way.
So the listeners did not miss me. Let's just put it
of course.
that way.
They did not miss your insights and your intelligence.
Yeah. Now you're just trying to blow smoke up my butt.
Well, anyway. So real quick before we dive in here, Mr. Muckerman, 27th anniversary, and I haven't seen that online. You were the one that told me.
Yeah, I just in a daily email from the Wall Street Journal on Some Things Energy, there was like the fact of the day was that it happened in 1989 on March 24th.
That was a big deal back then. Why does nobody care anymore?
I don't know. I guess because you haven't really seen other than the Gulf in, 2010.
Well, yeah, do people care about BP now?
I'm sure in a couple days. I mean, this is going to be the 5th year anniversary of it.
Yeah.
I'm sure somebody will say something about it. And that might also be part of it because the BP oil spill was that much bigger.
Yeah.
And there just might be why don't we focus on this one and we'll just stay mad at BP instead of ExxonMobil? Aside from the Rockefeller family, who actually just divested their last shares out of their
trust. Could you
trust
believe how small the trust was, though?
Yeah, no, not really.
I was like, wow, that's it. Anyway. For our listeners that don't know, feel free to Google it. But the Rockefeller Trust, which, obviously is the legacy of one John D. Rockefeller, the founder of, ExxonMobil was just a part of what was once Standard Oil.
Yeah.
I mean, it was the American corporation. But I think the trust was just $130 million at last count.
Something like that.
Not because Rockefeller was one of the world's first billionaires. Anyway, so moving on to the events of the day. First up, I guess it's LNG's turn to go through a bit of a rough patch in sympathy with just natural gas and oil and all that. Australian oil and gas giant Woodside Petroleum, which they're the biggest, correct me if I'm wrong, Australian oil company, right? They're ExxonMobil. Shelved plans to develop a $40 billion, and that's U.S. dollars, liquefied natural gas project. That's big, no matter how you slice it. Asian LNG prices have declined 45% over the past year, so I guess we can't be surprised there. As I understand it, U.S.-based LNG exports are the low-cost option just because we have so much natural gas in the continental United States. Is there a window of opportunity as these other LNG facilities get nixed?
I think so. We're at a point now where we had this mad rush. Back in, 2010, 2011, shale was really starting to take off, and you had the big push in even just before that with oil prices as high as it was. Everyone was kind of looking at natural gas as a possible alternative, and LNG got really sexy for a while there.
Right.
You had Chevron with its Gorgon project and its Wheatstone project, and it seemed like Royal Dutch Shell brought out 5 different projects at the same time, everything focused on LNG. And now we're starting to, they're starting to look at it and go, oh, shoot, maybe we're trying to bring too much on all at once, and the demand hasn't quite been there yet. And so, we have, Woodside's Browse LNG has been nixed now. Royal Dutch Shell had one called Arrow LNG that it nixed last year. And then we've got 2 very big ones up in the British Columbia area. One Chevron's Kitimat and another one from Petronas called Canada LNG. And those are kind of looking a little shaky as of now. I was actually up in Canada 2 weeks ago, and I was listening on the radio, and they're all worried about the kind of the northeast gas fields in British Columbia laying off people left and right because it's looking like these LNG facilities might not go through.
And a lot of those are due to environmental issues in Canada. They've been but going back and forth on that for the past 3 years or so. So, those are both still on the fence.
I was going to ask you, Mr. Fool Canada himself, Taylor, how do you see this shaking out, not only for U.S. players, but Canadian players? Because do you lump Canadian LNG producers with U.S. producers?
Not so much. There are definitely different companies operating in both areas, but when you look at the possibility of exporting, I'm sure that a U.S. producer in the North Pacific Northwest could get involved with those British Columbia facilities to export natural gas due to the proximity. So maybe some natural gas from the Bakken, if there's anything coming out of there, they could, instead of flare, they could ship it to these export facilities to be converted to LNG and sent overseas. But the U.S. has, what was it, 6 approved facilities that are under construction right now to export natural
Wow.
gas. So we're talking about several billion cubic feet per day of export capacity, and the Sabine first train just came on this year. So we're seeing a lot of progress there in the U.S. and not so much elsewhere in the world.
Wow.
Yeah, I was actually looking at Cheniere Energy's like investor presentations yesterday, and the total amount that's expected to come online between now and 2025 in the United States alone is 50 million tons per year of LNG.
Really quick, just before we move on, either of you, maybe Taylor, what is LNG primarily used for these days?
So you're bringing it over. The ships are going to start using it as power to transport themselves while they're carrying the LNG. But then once you get it to an import facility, you can, I guess, for lack of better terms, thaw it out and then use that natural gas as a power source.
So once you raise the temperature, then it just becomes regular old natural gas.
Yeah, it returns to the gas state. And when you look at the spreads between natural gas in the U.S. and natural gas in say, Asia and Europe as well.
It's huge, right? Yeah.
It was a lot bigger. I'm not sure if it's still as wide as it was, but evidently it's still economical for companies like Cheniere to liquefy their natural gas, ship it, and then regasify it and still have a profit there to be made.
Got it.
Yeah, and it's actually on a slightly small, kind of maybe more like a longer tail sort of approach to LNG is actually, if you look at some of the domestic players in the United States, they're actually looking to build natural gas engines that run on LNG rather than like the gaseous state of natural gas, basically because LNG itself is a more energy dense product. One of the biggest reasons we've had a hard time replacing diesel and gasoline around the
so
world.
much energy.
There's so much energy packed into it,
Yeah.
and so natural gas, it's in a gaseous state. It doesn't have the energy density, and so there's a couple companies like Clean Energy Fuel is actually building LNG fueling stations, and there's
Don't they have like 500 already or
that's
something?
compressed natural gas as well, but there is a little bit of the idea that you could use the energy density of LNG to help replace the traditional gasoline market in things like long haul trucking and things like that. It's a pretty long tail because handling liquefied natural gas at its super cooled state would be very, very difficult to do on a small scale. But it's an idea.
So, guys, this is a story that we have talked about before. We will definitely talk about again, and that is, of course, the Halliburton-Baker Hughes merger. Not only has the deal been held up by the European Union, but now French oil giant Total has voiced objections as well. Taylor, I want to start with you. Is this the final nail in the coffin? I mean, when are we going to call this thing?
I don't think so. I mean, both companies, the deal for them is April 30th is when it can be terminated. It's not an automatic termination, but that's when Baker Hughes could, say this isn't clearly going to work.
And then a big check is written.
We're going to pull out. Yeah, then a $3.5 billion check is written by Halliburton. So they still have over a month until that happens. But even still, I believe that both parties would want this to go through. So from that point of view, I don't think this is the final nail in the coffin. I just don't understand how they could have originally, back in July, been told that they didn't. This is not Halliburton in particular. They haven't specified which company hasn't given details that they need. But this happened last July. They said, the European Union said they needed more crucial details that were missing, and that's what they're saying now. So I don't understand, unless they need details on an ongoing basis as things change, then this is kind of, it's kind of vexing me right now. I don't understand it.
Tyler, were you surprised when Total came out? Because you were saying that they're not the only big oil company that's like saying, no, we don't want this.
Why would
you have to understand the interest, right?
Yeah, why would any oil and gas producer want less competition from its service providers. I mean, it's basically almost like a transfer of power. If oil service providers get bigger, they can command better pricing power. They can, charge more for what they're doing because they can basically say, hey, there's less of us involved. We don't have to undercut 7 players. We only have to undercut 3 or something like that. Or in this case, 2 versus 3 players. And, so of course they're going to come out and say, we don't like it. And of course, Halliburton and Baker Hughes are going to do everything in their power to try to get it done, simply because, like you said, better pricing power. My biggest fear of, I guess, what we could call a zombie story, because it's been going on for
it's been
well over a year now.
6, 8, yeah.
It's close to 18 months, I think.
November is the monthly anniversary.
We talked about this on our first episode together, all 3 of us.
So my one fear for anybody invested in this would be that with all the regulation and approval that has to go through it, my one fear would be that they actually have to kind of divest themselves of so many different options and services that they're really not a whole lot bigger than Halliburton was originally. That would be my one thing that kind of would get me hung up on the whole project, on the whole process.
Got it.
So I definitely get that, but from everything I've read, they're not really hung up on the divestitures at the moment. I mean, they're just hung up on a lack of details. Could that lead to more forced divestitures? Yes, but they're not really specifying what they're looking at exactly. They've already announced that they're going to sell Baker Hughes' offshore drilling and completion fluids division, and a few of their overlapping on-land businesses. So, and if they do sell it all, then they're flush with cash, right? So maybe they go out and really hammer home on some of the areas where they have already an advantage, and they just extend that, but they're more concentrated.
Cool. All right, well, before we move on, I wanted to point out to our listeners that April is Financial Literacy Month, and in that spirit, we are giving away 10 books to 10 lucky winners. These books include favorite financial picks from David Gardner, Morgan Housel, and so many more. To enter to win, just go to podcast.fool.com and click on the Super Podcast link at the top of the page. Once again, that is podcast.fool.com. So moving on, this is actually another ongoing story that we've had. You guys will remember where we weren't sure if...
It doesn't seem like we have any quick hit, like something happens, and it just seems like nowadays all of our stories are just like, man, this just keeps going on.
Dearth of material. It's a sad thing.
I guess.
But our listeners will remember, and I'm sure you guys remember, everybody thought that in a bankruptcy court, distribution contracts between a producer and a pipeline company would kind of be held as sacred. And these contracts, I mean, what were we talking about? They went out as far as 5 or 6 years in a lot of cases. In a great piece put together by the Fool's own Matt DeLallo, we recently got the details on some contract negotiations between... I mean, I'm just going to say the word troubled. Chesapeake Energy, I mean, they're very, what are their bonds at? 10, 20 cents on the dollar right now? Anyway.
Not good.
Not good. But they're negotiating with Energy Transfer Equity and Williams companies, and based upon the length of the contracts, it seems like these two distributors, the pipeline distributors, Energy Transfer and Williams, they're not too worried about Chesapeake. How surprised, Tyler, were you when you read this?
Either they're not worried at all or they're really worried. I mean, it could go either way.
This is kind of a catch-22 kind of.
So the whole gist of it is that Chesapeake Energy is looking, not good, and there is a very real possibility that
because they're primarily natural gas producer, and nat gas is still less than
stupid
$2.
Cheap.
Yeah,
and there's a possibility that it could go under. And so what has happened here is Energy Transfer and Williams companies, two companies that actually rely pretty heavily.
Do you know the breakdown?
On Williams Partners, so the subsidiary of Williams Company, 20% of their revenue comes from Chesapeake Energy.
Okay.
So basically the idea is we're going to cut them a little bit of a break on how much we're going to charge to use our systems, our gathering systems, pipeline network distribution, in the opportunity that they'll have higher volumes in the coming years, and we'll make it up in a couple of years once these guys start to head back in the right direction.
Got it.
So there's that idea, and that's how they kind of pitched it as the upside of, yeah, we'll give them a little break now, but we really see the opportunity to gain in a couple of years with the higher volume growth. I think the bigger question is Chesapeake going to be around long enough to actually get the higher volume growth? And that's the reason I look at this deal and go, yeah, they're cutting because they're cutting how much they're charging Chesapeake because Chesapeake can't pay it, and if they don't, then they're gonna have to go find a whole new company to get it from.
Yeah. So Taylor, do you think that what Tyler said? Do you think they're not worried at all, or they're actually really worried and they're trying to save them?
I'm gonna have to go ahead and agree with him on this one.
It's kind of screwy. Anyway, okay. So we just got an update on the Sabine situation. I said that right?
Yes.
In a follow-up to what we were talking about a couple of months ago, the judge actually ruled, and it was kind of hinted when we talked about this, that oil driller Sabine Oil and Gas Corp., which filed for bankruptcy in July, could reject contracts with 2 pipeline operators, HPIP Gonzalez Holdings and Cheniere Energy's Nordheim Eagle Ford Gathering. Wow, that's a long name. Anyway.
That's the one thing with energy companies.
They're not
has,
creative.
They're not. They have horrible names.
They're not
They're
creative.
the worst names in energy.
I'm really surprised at this. Like, why bother having a contract then? Like, if,
I think Taylor's rant a couple weeks ago was the perfect example of that. It's like if the company can't even pay
Well,
it.
thank you very much. I'm tipping my hat.
But and that's another thing. Like when we look at this kind of Chesapeake deal that they're doing with Williams Company, basically this court decision kind of says, yeah, if a company's in bankruptcy, they can rip up these contracts and not make it worth it. So
that's why Chesapeake
if
is
you have
negotiating.
Chesapeake that is kind of teetering on bankruptcy, Williams might be like, well, if we renegotiate a better contract now that
Maybe they
helps them
won't.
get through, they don't go bankrupt and completely rip up the contract and have to go to somewhere else. And
So
then
this-
all that development that we've done for to work with them over the years is flushed down the toilet.
Okay, so bottom line, this probably means everybody's in trouble.
A little bit.
Okay, cool.
Maybe that's me being a little bit more pessimistic, but
Right.
that's kind of my take on what's going on.
And winding down here, we have a listener question. So it's time for mailbag. Co-West Wins writes in, and I'm paraphrasing here. Thanks for the recent podcast on the battery industry. Do you think there are threats to the industry at large? Also, with Tesla building its Gigafactory, would that, basically buying Tesla, be the best way to invest in the future of battery usage? Thanks. Love the podcast.
I guess I'll take that since I did the interview last week on with Steve Levine on his book, The Powerhouse. So what are the biggest threats to the industry? Well, one of the things that you really have to consider...
Cheap oil.
Well, I was just going to say technology development in general. We're looking at we're looking at a product that is still technologically a little incomplete. We figured out a pretty good solution. We haven't figured out the ideal solution. The one that is actually going to be able to, compete heads up, no subsidies, no government favorability.
Because technically, a lithium-ion battery is a chemical reaction.
Right.
They lose their efficiency after, correct me, just a couple of years. It starts dropping a little bit.
It's on charge cycles. It's not actually on any specific timeline, but how many times that you charge and discharge the battery. There are components within the structure of the battery that will start to break down as those ions kind of transfer back and forth. And so the biggest threat basically is that today's technology gets disrupted and gets thrown out the window within 18 months. And if you look at anything, I think a great example is solar panels. If you look at how much efficiency has improved on solar panels over the past several years, and you can even go back 10, 15 years, that it's gone so fast that a 10-year-old solar panel nowadays is almost obsolete.
Wow.
And well, at least in comparison to
Well, yeah,
current.
some solar panels right now put out by God, was it SunEdison?
SunPower.
Yeah, they're hitting 21,
22%
Yeah,
efficiency
that's
levels, which is
crazy.
almost double what it was 10, 15 years ago.
Well, I was reading, if you read the book The Martian, I had to plug a fiction book that was just made into a movie, but he was talking about how the solar panels on the rover was like 10.
Yeah.
It's just crazy what they've been able to do in the last 5-10 years. So,
So, I as a threat, I see that as the biggest one. Basically, if you're making an investment in the industry, it could get thrown on its head within 18 months, and just on the simple progression of the industry. And we've seen this. everybody talks about like the Cylindras and the A123s and all of these companies that have gone bankrupt, but that's just how fast the technology is evolving. Somebody comes out with a great technology, looks like they can sell, they can market it, commercialize it, and then boom, 18 months later, it's an obsolete product, and it's very, very difficult to catch up.
So, Taylor, you get the last word here. What are your thoughts on Tesla? Do you think they got ahead of themselves with the Gigafactory? Was that a necessary risk they had to take in light of, what Tyler said, sorry.
With Tesla, so I do think that the Gigafactory is going to be a benefit to them, if only the fact that they are going to be able to put their own batteries in their own cars, so you eliminate some of the cost structure. So maybe it's not like a play on global use of lithium batteries, but it certainly could be if this technology is used for the foreseeable future. Another company, maybe Johnson Controls, if you didn't want direct, like 100% exposure to lithium-ion batteries, that's a company that is very well diversified, also mainly with the automotive sector. But their lithium-ion batteries is a segment of that business that could possibly grow if lithium-ion batteries take off in cars around the world, as Tesla and other models are proving possible.
Awesome. All right. Well, thanks for your thoughts, guys. We'll
Cheers.
see you next week.
Yep.
If you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that's industryfocus@fool.com. And as always, people on this program may have interests in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear on this program. For Tyler Crow and Taylor Muckerman, I am Sean O'Reilly. Thanks for listening, and Fool on.